If you're in your 40s or 50s, there's a quiet tax change coming in 2026 that could cost you thousands of dollars a year. Even if your income doesn't increase at all, most people won't notice it until they file their taxes, and by then it's already too late. For years, many Americans have benefited from lower tax rates and a higher standard deduction. Those benefits came from the Tax Cuts and Jobs Act passed back in 2017. But here's the part many people missed. Most of those tax cuts were temporary. Unless Congress steps in, several key provisions are set to expire at the end of 2025, which means 2026 could look very different on your tax return. The Tax Cuts and Jobs Act lowered individual tax brackets, nearly doubled the standard deduction, and expanded certain credits like the child tax credit. But these changes were never permanent. Starting in 2026, tax brackets are scheduled to revert to higher pre-2018 rates. The standard deduction is expected to shrink. Several deductions and credits may be reduced or disappear entirely. In simple terms, more of your income could be taxed at higher rates. Yes, the IRS has announced inflation adjustments for 2026. Tax bracket thresholds will increase, standard deductions will rise modestly. That sounds like good news, and it is, to a point. But here's the issue. Those inflation adjustments may not be enough to offset the expiration of the tax cuts themselves. Think of it like this. You're getting a small umbrella, but the storm is getting much heavier. Projections suggest that up to 62% of American households could pay higher taxes in 2026. Let's look at two simple examples. Example 1. Married family of 4. Under current rules, they benefit from a larger standard deduction and expanded child credits. In 2026, their taxable income increases, even if their salary stays the same. Example 2. Single filer in their 40s, no raise, no promotion, but higher tax brackets mean more income taxed at higher rates. This is how people end up paying more taxes without earning more money. The real danger here isn't just higher taxes, it's being unprepared. Many people assume taxes will go down later in life, but between higher brackets, reduced deductions, and income-based benefits, the opposite often happens. That's where many retirees and pre-retirees get surprised. This isn't about panic. It's about awareness. For those in their 40s and 50s, now is the window to understand where your future income will come from. Think about tax diversification, avoid waiting until retirement to address tax planning. You don't need to have all the answers today, but you do need to be asking the right questions. As 2026 approaches, staying informed may be one of the most valuable financial decisions you can make. If you want calm, practical discussions about taxes, retirement, and avoiding expensive mistakes later in life, consider subscribing. This channel isn't about hype, it's about planning.